Good turnaround Tuesday, Warriors. Everyone doing okay? Good morning, Claudia. How's everyone doing today? Okay, so I want to talk about a few things and may take a little longer than usual, and we have time because I don't believe Blake is here. He's a great dad helping his son become a better soccer goalie. So I want to start off with Euro Pound. Last week it was a turnaround Tuesday candidate up around here. We had one more marginal high and broke almost 100 pips. So far we've rallied to looks like ABC fashion, rejected from 50%. Now just trying to hold on to this 89.55 level. So when I look at a chart like this, I ask myself, where are the stops? Now, of course, there could be buy stops after today above here, but this took care of most of the bears, okay? And this has been a very long, sustained uptrend. So I would guess and assume that there are a lot more longs in this market than shorts. Everyone with me? And then we had this. Okay, so perhaps there was some liquidation on this, but I really think it hasn't even really begun. And I know where the stops are. Do you guys know? You want to know where the stops are in Euro Pound? As I expect them to be elected in rapid succession once we start rolling to the downside. Okay. And yes, I could still be wrong and we could close back above 90.30 or so and I'd get out of the way. Okay, so here's where the stops are. That's a little messy. Okay, there's stops here. Okay, under 89.50, a lot of people call this just a breakdown. Okay, so this is where we took out all the people trying to short it on this return line, wedge line, megaphone line, whatever you want to call it. So all the shorts are out. Okay, but the longs are still in, and your first stop level is going to be right here under 89.58. Your next stop level is going to be here under 89.20. Here's another level. That's going to be under 88.70. And there's probably a grand prize or two under that as well. This would be the grand prize. I'm not going to get that ambitious for a move under 87.24. And I'd say that most people after this move, if they have any money management skills, they've put money in the bank, they're trailing their stops. So I don't think they're down here anymore. So I really think this is going to be an important stop level. I bet there's at least one under 88.72. And that's kind of an area I'm going to be looking for as a target between there 88.80 to 88. So looking for stop hunts to happen in EG. Want to talk about the S&Ps here. So this could end up being a turnaround Tuesday candidate. I haven't done anything yet. I'd like to see what it does. One more attempt over 299. I'll be looking for an entry and risking the high of the move on this. And the reasons are not anything you could see on the daily yet, but this 29.60 level, we've all been talking about it. Everyone sees it. Everyone sees it. Everyone sees it. Under 29.60, I think from high, that's 60 handles. So I think that could get us to this 29.10 level. Okay. I may as well get rid of this fib here. And move this, move the, whoops. Come on, baby. Okay, anyway, forget it. Under 29.60, I think we're going to 2,900, under 2,900, 27.60. And, you know, it's very possible everyone First of all, the people in the stock market are all feeling very comfortable because the Fed's going to ease, right? So the Fed's going to add some fuel to the rocket. And I know the setup actually in COT is a little more bearish in S&Ps and bonds, but I also want to, with the yen acting okay so far, really is, this pullback in the yen may have been it. I thought we might get one more test of the wedge line, maybe even go to 78.6. And if we get an S&P correction, that could still manifest. But here's where I think they have even more people trapped. And I've been reading about the COT setup, and it's not really that bearish in bonds. So I know some people looking for new highs, and you know, I could see that happening, but I'm just thinking tactically here. So here's a TLT, 20-year ETF of the bonds, and we had an island top. Okay, so I think a lot of people are trapped long over here, calling this a breakout, right? And you know, then they have this break and they're going, huh, what's going on? The Fed's going to ease, and they think the Fed's going to bail them out. Okay, they'll see 134 again. Maybe they're right, but you know what? They might punish them and see if they have the guts to stay long, especially if we take this out, which really was just a test of a throwover. You know, between now and next Wednesday is a lifetime in these markets, right? So perhaps with the yen being strong, risk on. If I'm wrong about S&Ps, the bonds could trade, you know, down to back to these highs, 26, 24. And no one thinks that the bonds and the stock market could both be right together. And everyone's, all the stock bears are afraid to be short bonds, and all the bond bulls want to be short stocks because they both shouldn't be going together. And maybe the bonds will get a bigger boost if there's risk off. Okay, so why can't they both go down together? And maybe this is just a correction in the bond market. And then if S&P sell off drastically, I mean, you know, under 2,800, sure, then you could get a new rally to new highs. I do want to kind of wrap it up with what I talked about yesterday and why EG is working, and then just one more currency comment. So yesterday talked about the structure and cable being stronger. Okay, so here's your 1 hour. It might be trying to change right now, but here we are at new lows in euro. And even with Boris Johnson, we're still putting in a higher low in pound. And then my buddy, Jim Welsh, we're breaking out in the dollar over this blue line that I've had here for a while. Maybe we're on our way, but you know what he called the four technicals in the dollar? He had a new formation for it. Here it is. Unintelligible. So this is a new technical designation for the dollar index. Unintelligible. And Steve's been saying that forever with the euro. Why even, you know, look at it? But it's been a nice little short here. So this to me looks like a breakout. And maybe now, if you just count this from here to here, and we maintain this breakout, and I know a lot of guys were looking for 99.20 as a possible high in the Dixie. I believe this measures it. Let's see. 585. So call it 180. No, call it, yeah, I call it 2. That gets you up towards the 99.20 level up there. So dollar looking okay. Turnaround Tuesday. The only other turnaround Tuesday candidates that, you know, and it's really been tough. I've had a tough time trading it too. But when I look at crude here, this could be a buy zone in here for another push up. And when I look at something like this, You know, I have one drive, I have two. Maybe there's another blast coming. And something else that I'm going to wrap it with, just fundamentally, tomorrow's Mueller Day in Congress, and things are still simmering in the Persian Gulf. Be careful about being short oil. I went short oil in this environment because if it is damaging, what happens, you know, and Mueller says more, or just reading the report has a negative spin on it. I've heard comments of the administration. They're describing what Iran is doing by taking the UK tanker as setting up the conditions that's making it more difficult and more likely that a miscalculation could occur. Okay, so the onus is on Iran now with what they're doing, and you know, maybe we can miscalculate if the testimony on the Hill is damaging. Be careful on the short side of crude, bears. Okay. Any questions for me before I TO to one of the best traders I know? Steve Volgi? Anything? Okay, bro. How are you, Steve?
Hey, Coach.
Good morning, Dale.
Hey, good morning, Stel. Good morning, Steve. How are you?
Good. How have you been?
I'm doing okay. So what do you think of Jim Welch's technical description of the dollar index chart? Unintelligible, he said.
Yeah, it seems like an accurate one.
Yeah. Okay, so you know, it's probably Stel time to talk about Boris.
Hammer time.
Yeah, Bojo, baby.
Boris and Natasha.
Yes, well, as expected, broadly expected, Boris Johnson was pronounced prime minister. He got the vote of over half the Conservative MPs, and if I'm not mistaken, around 2/3 of the Conservative Party members. So it's relatively strong mandate, but we have to remember the Parliament and the Conservatives are deeply divided on Brexit and on his potential leadership. You know, he's a very interesting character and a very controversial one. So, for example, we had straight away, you have the two camps, and Chancellor Philip Hammond and Justice Secretary David Gauke said they are going to resign. And yesterday we had the Foreign Office Minister Alan Duncan and the Education Minister Anne Milton, who already resigned. I guess they saw it coming before everybody else.
You didn't need to be a rocket scientist.
You know, guys, Piers Morgan is available. He's always available for any job that's out there.
He's in the US now, right? He's got a show in the US, doesn't he?
Oh, I don't know.
Sometime now.
It's hard to keep up. You know, his career is harder to keep up than Dale Pinkert's career in the other.
But basically, the way things stand now, you have two camps. There are some who are very, directly for the new prime minister, like Dominic Raab, who was a leadership candidate before, the London mayor, and of course Donald Trump, he's a fan of Boris Johnson. Yes, well, you know what though? It's the United States, the biggest, the most important, let's say, country in the world. It's not a bad thing to have them on your side, but then again, you have people against Boris Johnson, like the Scottish National Party leader Nicola Sturgeon, some EU leaders who have said in the past they see him with some suspicion. And there is also cases. I mean, I read this and I was actually laughing. Liz Roberts, an MP for the Welsh Social Democratic Party, who said that the new prime minister is a clown. So tell us what you really think, Liz.
I've seen plenty of pictures that
corroborate that.
Corroborate that version, to be fairly honest. Yeah.
So what do we have now? Okay, so Boris Johnson has said in the past many times, the UK will leave the EU on October 31st, no matter what, deal or no deal. And this is what the markets have been a little bit scared of when it comes to Boris Johnson. We have said in the past he's a bit unpredictable. So if anybody's going to get,
I'm with him on that, to be honest.
Fair enough.
Yeah, I mean it's like a band-aid.
Yes.
If you are to remove it, just do it fast. So
Yes.
I think that if for some reason they could keep prolonging Brexit, they would keep prolonging it. And as long as they know that they can keep prolonging it, and the political leader, whoever it is, would be willing to do so, there would have less reasons to find a compromise or some kind of a solution. So at least, one way or another, I hope he stands by that, and we do get some kind of a Brexit by the 31st. If that's the case, and he's actually believable on that, that should accelerate the process of finding some kind of a solution, I guess.
Yes, and you talk about that, and you're absolutely right. And we saw a great example of what's happening with this extension. We had the CBI industrial trends orders today, and this, for people who don't know, this shows the expectations of the manufacturing executives in the UK. And the previous reading was -15, which is really not good. It's it shows pessimism, deep pessimism, and this reading was -34. And you have to go back to the 2008 crisis to see numbers as bad as this. So the more they prolong this, the more the UK is hurt. The UK economy is hurting, and they can see it. So they should really be doing something. And I was going to say before, weirdly, maybe if anybody's going to get some kind of progress with the EU in some way, I don't know what, maybe it's probably going to be somebody only like Boris Johnson, who's really a loose cannon. And you have somebody like May for months and months discussing with the Europeans. The Europeans knew exactly what she was going to do and say. It's like playing in a poker table.
I didn't really know May. I had just heard her name before I saw her as the British Prime Minister.
Yeah.
It took me 1 minute watching her speak, and my first impression, and the strong one, was she's very weak. She's not suited for the job. End of story. You know what I mean?
Yeah,
she might have been an excellent person. I have no idea. I don't know her. Or she might have been an excellent minister, meticulous or, hardworking or whatever. But she wasn't fit for that job, especially at the specific, juncture.
Yeah. I've said it before, if I was playing poker against Theresa May, I'd be the happiest man in the world.
Yeah, true.
It's like, so she didn't get anywhere with the Europeans. Will Boris Johnson do something? I don't know, but you know what, he probably has a better chance than anybody else at the moment. So
definitely than she did. Yeah
so let's see how that goes, but we're waiting to see the speech and the what his first moves are going to be. But interestingly, the market actually, after he was announced, euro sterling dropped by 20 pips. So the sterling jumped a little bit. Yes.
Cable jumped. It has, to be honest, it has pared back a decent part of the gains. So I think that the market is now focusing on what he's going to say, and most importantly, how he's going to say it.
Yes.
I wouldn't be surprised if we keep on seeing some two-way volatility in the cable in the upcoming days, because I'm assuming that we're going to hear quite a lot from him in the days ahead. So, the market is going to be trying to interpret what he says, what he means, how he intends to progress, and depends on that, we might see two-way volatility for sure.
Yes, absolutely. So that was a main event of the day. The other you'll be surprised to hear the debt ceiling. Yes,
the debt moving ceiling. Yeah.
They are going to suspend the debt ceiling. I mean, what the hell does that mean? And boost spending for the next few years.
I'm all for suspending it indefinitely, because by keeping it, they're just making a mockery of the whole thing. Either cancel it or honestly try to abide by it. I mean, set it, give a little bit of a leeway and say, we're gonna push it higher, and we're gonna have a goal that, let's say, within the next 2 years, we're gonna balance our budget, and that's it after that. That's the only two alternatives that make any sense. Anything else in between is just a joke.
Yeah. And the way things look, next year's budget deficit will almost certainly be above $1 trillion. And when I see this, and I see central banks,
you mean the official joke deficit, or you mean
Yeah.
yeah.
The one they talk about is imagine,
Yeah,
right?
because it's an imaginary budget deficit. I actually have no idea how that passes through Congress or how they permit that to happen. I mean, last year we had an official, like, what was it, 750 billion, 780 billion,
Yeah.
I don't remember, somewhere there,
Yeah.
deficit, but the actual lending amount that the US needed to finish the year was almost at 1.4 trillion. The difference theoretically was the off-budget items. And, somebody hears the term off-budget items and thinks, okay, this is like a minuscule percentage, added to the regular budget.
It's
Like,
another 50%, basically.
yeah, like 5% or something like that, which you'll say, okay, fine, it's off-budget items, it's unexpected expenditures that, you cannot initially, plug in the budget. And yeah, there's going to be like a little bit of a deviation by the end of the year. And, you add a little bit and that's the off-budget items. But now we've gotten to the point that the off-budget items are like, I mean, last year were another 80% of the on-budget items. I mean, what kind of off-budget items are that?
Yeah.
I mean, it makes no sense.
Yeah, but personally, the more I see central banks like and governments like the US, the UK, Europe, everybody, they're generating big deficits. As long as I see that, I continue to like real assets in any form. End of story. Sure, they're going to be ups and downs, but the long-term trend is going to be higher. And that's my view.
Oh yeah, absolutely.
So I think that's it from me. We have existing home sales from the US in an hour and a half, but
yeah,
I don't think it's going to be a market mover.
Yesterday and today it was very, very light on news. We've had a few things that have been moving, and I'm going to focus on those. And after that, we're going to have Andre with us, which is a good thing because it's going to take me a few minutes to cover whatever has moved. And then Andre, as always, is going to give us like a longer term perspective, what he thinks are good trading opportunities. We're going to try to have in the same manner tomorrow either Paulie or Grega, and the day after that, whoever of the two doesn't come tomorrow. So we have some a variation. Okay, so let's start by what has been moving. And the obvious first thing that has been moving, and let's go down to 4-hour chart, is the Euro USD. The Euro USD has now broken below this little red triangle. Here it is on the 4-hour chart, and it is moving lower. That is really not that much surprising to me. I thought that we might spend the rest of the days consolidating before we actually move. But as I was explaining yesterday, I really see a very decent probability that the combination of the ECB this week and the Fed next week might move the dollar higher. Obviously, if the market was thinking more or less what I was, the market is trying in advance to price in that fact. So Euro USD has broken below this triangle. It's now trading below the 78.6 from the May low to the high. That was a perfect ABC recovery. You can see it here. It was perfectly channeled. I mean, it was literally a perfect corrective move higher. It looks more and more as a corrective move, especially as we keep moving lower, which means that 111 is once again at threat. I'm also monitoring this little ascending trend line on the RSI, which is also breaking down on the 4-hour chart. So, I really have no strong argument to advocate why somebody should be buying the Euro USD.
Can I interrupt you?
Absolutely, Andre. Go ahead.
Good afternoon, everyone. Can you please make me a favor? Extend that red line, that support line. Extend that support line below. No, that one.
Yeah.
109.98. Can you see that heads and shoulders there? That major heads and shoulders that we are breaking now?
You mean this one?
That one, will that surprise you to see euro dollar trading at 110?
No,
Retesting
no.
that trend line?
It wouldn't surprise me at all. As I just said, I mean, this rebound higher has every corrective characteristic. I guess you harmonics guys would call this an ABCD, right? This.
Yes, we actually I shared that completion
Yeah.
point for that pattern.
So no, I wouldn't be surprised at all. And add to that the fact that the DXY is doing the exact opposite here.
Exactly opposite. Yeah.
Yeah. I mean, we've been breaking above this trend line.
Inverted edge and shoulders there.
Yeah, you know,
usually we search for those on bottoms and tops.
Yeah,
so
it's not that. I mean, there is like a dichotomy, between people that assume that head and shoulders formation are only reversal formations, and people that.
That's me. Where do you come down on that?
I've seen it work as a continuation formation.
Yeah, me too. That's why
very similar with cup and handles. They'll people
yes
use search for them for continuation,
but
and they act and sometimes they act as reversal also. But if synced with other motives, they can work very, very well. So that's why I
fade them anyway. I've tried it.
Yeah.
You know how people take.
Coach, I'm assuming that your microphone is on the top of your head.
Oh, you are unbelievable. You're like Kreskin. Okay. And anyway, you knew and I didn't know. Okay, so yeah, you know how people take the Bible, completely seriously. So I was like that with Edwards and McGee.
I find it hard to believe, but yeah, I know.
Okay, but Edwards and McGee was my Bible of technical analysis. So,
oh yeah, they've definitely.
They said it was a reversal formation. The guys have made about 8 editions of it. So, it took me, like everything else, a little pain to change my mind. But I believe they're real now.
So
inter trend head and shoulders type formations and smaller time frames.
Because if we search, if you see that inverted edge and shoulders, actually it connects as a reversal because the market has been trading in a lower degree bearish momentum. So at some point the market can print that pattern there also.
It's a fractal. Why not just call them fractals?
Yeah.
But bottom line, we can have many debates about if a head and shoulders formation can be a continuation pattern or not. But what is undebatable is the following: despite this recent rebound, which definitely wasn't
still above that wedge.
I mean, we still have in hand, if you have a look at the Euro USD, a clear downtrend from the February 2018 high. So would it really be surprising if we ended up posting a lower low? Right. Same deal, and even worse actually.
Maybe it's a 4 and this last thrust will be 5.
Might be. Same deal and even worse with the DXY. I mean, we've been saying again and again how impressive it is that the DXY has kept consolidating roughly at the same levels from the period that the market was pricing in like 3 or 4 rate hikes for 2019. And despite seeing a full reversal in market's expectations from hikes to cuts,
great point.
The DXY has been holding on like a champ. So
I just have one more comment on head and shoulders. When I saw Troy Polamalu in being the spokesperson for Head and Shoulders shampoo, I bought a bottle. It did get rid of my dandruff, but I didn't seem to get as many chicks as Troy Polamalu of the Pittsburgh Steelers.
You need to change to Linic eventually.
Minoxidil.
That is
it's
the
thinning out a little bit. Anyone?
No,
you can see my scalp after a haircut now, man. How about you, Andre?
No, I don't have issues.
Okay. All right, you're always wearing a hat. I don't know. I thought you were camouflaging.
But Steve, I'm sorry to interrupt you. And just remember that at this exactly moment, we have a bullish cipher pattern on Euro USD at 78% retracement, which I doubt. Who am I to doubt about the possibility for the market to work and to form the pattern, actually to trade in the direction expected? But we are now trading the 78% retracement on euro versus dollar. If you can show that published chart,
don't worry, you're going to show it yourself. I'm going to cover a few markets and then you'll take the chart and you can show whatever.
Sorry to interrupt you.
No problem whatsoever. We have plenty of time.
Okay.
So DXY Euro USD on the move. I find it rather easy for Draghi to attempt and perhaps even succeed in continuing this move. I mean, I expect quite a lot of dovishness coming out of the ECB. Of course, nobody can make a 100% prediction, but as I said, I would be unsurprised if just Draghi keeps talking down the euro and pushing the dollar higher. Anyhow, we see that the path of least resistance indeed remains higher. Now, having to do with the cable, not much has changed. Cable is holding much better today in comparison to the Euro USD. There is still a potential bullish interpretation here with an actual potential head and shoulders and a descending wedge. I'm saying that if, for example, the cable bottoms here and moves back up to 125.80, then we will have a little inverted head and shoulders here. But of course, that assumes that one will move higher from here. And second, and most importantly, that we're going to break above 125.80, because then and only then we're going to be able to talk seriously about the possibility of a larger rebound for the cable. Obviously, this little divergence that we see today is the one that has been pushing the euro pound. Actually, let's visit the euro pound on the 4-hour chart, because things are not really moving fast, so it's worth seeing it here. So it's been pushing the euro pound lower. Euro pound, if you look at it on the 4-hour time frame, you can even see the potential of a head and shoulders formation here. Let's draw it out as we speak. So here it is. But that also assumes that we break below 89.50. Okay, now, if that's the case, we see that this has a height of 100 pips. That would assume a move lower of 100 pips, which bodes very well with what we have on the daily chart, because if you remember, I've kept saying that the first target in such an event should be roughly here at 88.50, 88.60, this horizontal support area, which would also at the same time assume that we complete this head and shoulders formation target. So euro pounds, especially from a risk reward perspective, still looks very, very appealing for a move lower. But as I said, breaking below 89.50 is important. If we do that, I think that making it to 88.50 shouldn't be much of a problem. Of course, for every day that passes, and despite all the hesitation, we're not moving lower, I start getting a little bit more worried about this playing out, right? Because you usually, as Dale has very rightly said again and again, usually the market doesn't wait too much for somebody to go on board on something that looks rather obvious. So, ideally, I would have wanted to see this moving already. Yes, we did have a couple of days that of nice weakness, and that beautiful evening star formation there, which hasn't yet been validated. We're now in the third day that we're consolidating after the first leg lower. I want to see continuation lower, rather fast. Anyhow, silver, once again, overperforming gold. Once again, despite dollar being stronger, doing very, very well, almost at the highs of the days. Once again, retesting this horizontal trend line, descending trend line resistance. This looks to me like a consolidation here, which by default, by definition, has a higher chance of getting resolved to the upside. Let's go have a look at silver on the 4-hour chart. You can see it here. And as you see, this is like a triangle. If that's the case, we've already broken above it. Something like this. Okay. In which case, I would assume at least one more leg higher. So silver remaining very well bid. Gold, despite silver being positive on the day, you can see that gold is unchanged on the day. This is a 4-hour chart, still toying around within this previous triangle. Obviously, if we see strong move from silver higher, it should follow. But I expect silver to keep overperforming since we've seen that like huge reversal on the gold silver ratio. Now, for ForexAnalytix subscribers, they already know that I did post. We had a technical event on the DAX, and I'm going to show you after I show you what's happening with the S&P. S&P, this looks like a consolidation to me, so I find it very, very likely that we're going to continue higher, probably breaking out today. The DAX has already made that move, and I posted that a few hours ago. As you see, the DAX has been very technical. Move higher within a channel, correction lower within a channel, move higher within a channel, correction lower within a channel, and guess what? Earlier today, we did break above this channel once again, and that tells me that we are about to, like a fractal in essence, to have another push higher to new highs. I don't know now. I don't know if that's going to be in a channel as well, but who knows? It might be. With the next area of resistance being roughly at 13,000, as you see. So I think that the DAX looks rather healthy as long as it trades above this previous low at 12,181. It looks good to me for a continuation higher towards higher objectives. And as I said, S&P looks like it wants to do more or less the same thing. I mean, break above its consolidation and resume higher. And of course, whatever the S&P does, more or less the Nasdaq and the Dow Jones, a little bit less, a little bit more, are going to replicate. Speaking of which, let's have a look, which we haven't done in some time, at the VIX. As you see, the VIX is still, diverging. I mean, keep in mind that the VIX has been diverging since the beginning of 2018. And this is a very clear divergence. I mean, look at the volatility that we had. We even hit like 8.5, 8.6 at some point. And we had very subdued volatility. But following that period of time, we've had big spikes higher than volatility dropping and contracting, but never reaching the previous levels, and rinse and repeat. I've actually, for full disclosure, I've actually placed many months ago a bet with mine and Stelios' friend Ures. I bet that volatility is never going to hit single digits again in this business cycle. Ures was of the opposite opinion. So far, it's looking like I'm on the right side of the market, because despite new all-time highs, we haven't even come close to single digits, with the exception of this little spike here. We've stayed above like 11.5. And I do think that it's very likely that this is going to go on until we finally get the next bear market. And this kind of a divergence, I know it's long term. I mean, if you try to trade that divergence like 12 months ago, you would be a lot out of the money. That's why you don't just trade a single divergence on its own. I mean, you need a plurality of items pointing in the same direction. But I do pay attention to this divergence, and I do think that it is important and indicative that we have clearly gone to the last phase of this bull market. Now, it can last for a few more months, but that doesn't change the fact that we are in the last phase of this bull market. Ziggy says we have a solution, mint $1 trillion coin. Actually, Ziggy, you know, that was Bernanke's idea at some point. We got that floating around when they were afraid in 2011 that we're going to go in a double dip recession. So that was an idea that was floating around. The Fed was back then experimenting with several ideas in case the economy goes back so fast to another recession. And that was one of them. I consider central banks, you know, capable of any crazy stuff that they can come up with. Some comments about what we said earlier. Dimitris says when Merkel is out, Mitsotakis will be the most decent prime minister globally. I agree with you. Mitsotakis is a very decent, rather libertarian for Greek standards prime minister. And I think he's going to do a fine job. I mean, definitely in comparison to the previous ones. Okay, we have a question about crude. Let's have a look at crude, and then we have a question about the Aussie Kiwi and the pound Kiwi. We're going to have a look at those and then pass it on to Andre. So crude. Let's have a look at crude on the 4-hour chart because nothing really has changed on the daily, but I was checking at this a little bit earlier because this is what is likely happening here. I mean, this rebound higher so far looks corrective to me, so I would definitely not be surprised if we continue lower. Okay, so as long as we trade below 57.50, I wouldn't be surprised to see another leg to the downside for crude. So doesn't look that bullish here, I have to admit. Although in the grand scheme of things, there have been a lot of periods I've traded very successfully since last year, crude. But this is now a period that I don't feel that comfortable about what it's doing. So, you know, I'd rather stay away from it. But, you know, if I had to assume, at least the 4-hour chart shows me that might as well continue lower from here. Oh, a bit about it. We also have a question about the FTSE. So if you want to have a look at the FTSE, let's briefly do that as well. There it is. And here it is. Yeah, the FTSE is also moving higher. I mean, this was likely another little consolidation, right? This has already happened. There it is. So yeah, FTSE is also moving higher. There you go. Following DAX higher, probably, as I said, American stock indices are going to do the same, or at least that's how it looks like. Now, pound Kiwi. For our friend that's asking, pound Kiwi has obviously stalled at current levels, but is this enough to call a reversal? In my opinion, no, it's not. So, you know, unless we break back above 186, I would be very careful here because this might as well be like a horizontal consolidation resolved with, you know, another move to the downside. So I want to see more price action. Definitely the path of least resistance remains lower, especially if we confirm that this is a valid break lower from this multi-year ascending channel. So be very careful here trying to fade the pound Kiwi because it looks like it's broken. And the Aussie Kiwi, and then I'm passing it to Andre. If you remember, yesterday I was saying again that the Aussie Kiwi is testing confluence of supports. Nice reaction. Yesterday we, instead of negative, we closed like roughly unchanged on the day. We got ourselves like a nice spinning top there. Today we're seeing a continuation higher. Of course, it's too early to call, you know, another leg higher has begun because we could have done the same the previous time that we were testing this trend line support here, in which case, you know, we never broke out. But as I was saying yesterday, the risk reward was there for you to be buying it. If you did so, you're now in the comfortable position of having to manage a trade that is in the money. Obviously, if we end up breaking above like 1.053, that's going to be a nice technical event, which is going to be pointing towards the confluence of resistances, in my opinion, at 1.083, 1.084, which is going to be a nice upside target. So, Andre, go ahead and take the screen, mate, and give us what you got.
Okay.
Like
Steve,
that Aussie Kiwi call, Steve. They just shook out all the 61.8 buyers, did not quite get to 78.6, and coming out of here.
Sorry to interrupt, Coach. I just remembered something. Many would have noticed that the USD Swiss is diverging from the inverse of the Euro USD. And the main reason, because we had one question about it, is the fact that Euro Swiss is today as well under pressure. So keep in mind, it's currently testing a quite important horizontal support area. A break below there is going to be another bearish event, which is going to open the door for a move towards like 1.077 next. So Euro Swiss definitely under pressure, and that translates in the difference of behavior between USD Swiss and the inverse of Euro USD. So ready, Andre?
Yep.
Okay, take the screen, mate.
This one. Screen 2. Is this the correct screen?
Yeah, the one that says Pornhub, right? That's the one.
The one. This is.
Come on.
Bitcoin. it's Bitcoin.
Yeah.
No.
Go ahead.
Okay. I was just trying to push this. I don't want to show you Bitcoin. I want to show you Dixie. I want to show you Dixie.
Steve wants you to go over every crypto and altcoin in the universe.
I'm buying all of them. I'm buying all of them.
I wonder why they call them altcoins, because you alt to not buy them?
I'll tell you why, because shitcoin is not a politically correct term.
Thank you, Steve Bolva. Good thing Blake's not here today. He'd spank us. All right, go ahead, Andre.
At least nobody can accuse us of doing a boring show when trying to be politically correct, right?
Oh, that's the last thing we'll be accused of.
Yeah. And you can attest to that by singing something, I guess.
Then all their people will lose their pets. They'll all run away. I don't want to do it.
Yeah. So, Andre.
Yeah, I want to show you these published charts for our community. This is a weekly chart for Dixie. And as we can see, and based on the Fibonacci presented here, there's also alternative patterns projected above the recent price. So at 99.40, this is the 168 extension. This is a chart that it's published for our community, but I want to share also with our viewers today. So there's still, there remains a possibility to trade above this recent structure, which may force dollar to trade even higher.
In which case you will be looking for which areas resistance?
Well, I always look for the first one, the 168 extension, because it's a golden fib, and if it's synced with previous structure support and resistance levels, it can increase at least the possibility to feel some pressure there. We never know if it will be enough to achieve the default targets for the pattern. It's a pattern that requires a 50% pullback. The same will happen at 224 extension. At the same time, it's not the first time, it will not be the last one that we see the price respecting both of the levels and pulling back from both of the levels. So the 1/6, and we have a recent case on daily charts on dollar versus CHF. The market rejecting rejecting the 1/6 extension as support, bouncing and then later sinking into a 224 extension and then new highs. So it can happen. It's a weekly time frame chart. But based on what I want to call your attention and our viewers' attention is for the Fibonacci ratios presented here, suggesting the formation or the eventual formation of those patterns above. For that to happen, there are a few conditions that we need the price to fill, the breakout of structure.
So 99.40 and 103.70.
19,940 and 103.71.
Nice.
So this is it. Well, the fibs speak to me, and I usually like to see what they project. So at this point, there's also that possibility. I published yesterday the most recent 4 hours time frame chart for Dixie. Actually, I will show you this on a live chart, obviously, because the market is already trading above this weekly fractal and daily fractal resistance. So I use those fractals to guide pressure levels, and if I find some confluence between those projections for those patterns, it's always interesting to find confluence between different variables inside the market. So let's go into a live chart. 4 hours, 4 hour time frame charts, and let me try to.
Yeah, that would in essence assume a retest of the highs that the 1940. Yeah.
Yeah, 98.41. It's the 224 extension.
Yeah, it's also the previous highs in essence.
It's also the previous size, the previous fractal. It's a monthly fractal resistance. It's a very important level, just because of that. So it's a monthly fractal. The same way, higher time frames fractals tend to make more pressure. But it doesn't mean the market will not ignore completely these levels and trade above. So the Fibonacci is once again, we search for ratios based on those Fibonacci levels.
So your main case scenario is also dollar higher.
Dollar higher. Well, we are now breaking those daily and weekly fractals. We are breaking this descending structure trend line as resistance pressure level. Inverted edge and shoulders with default projections at 99.14. So I will not ignore that possibility. But if the market retests these monthly resistance, the market will feel some pressure there. We never know if the price will pull back those 50% retracements expected. We can try to see where the price will put that 50% retracement, or where is that 50% retracement. So basically, a fall from this monthly fractal based on the default targets.
We got the picture. Let's cover more stuff.
Okay.
What do you think about?
Sometimes I extend my speech. I'm sorry.
Don't worry. What do you think about the metals? I mean, I see a lot of people trying to fight this recent move higher with the metals, thinking that it might be like a last hurrah before like lower. From a technical perspective, I do see that they have some valid technical points. From a fundamental perspective, especially as the monetary policy seems to be unfolding in the days ahead, it would, I mean, if I just had to trade on a fundamental bias on what's going to happen, what's going to be announced within the few next days, I would assume that continuing higher for the metals is the path of least resistance. What do you think from a harmonics perspective? What do you think about
from a technical perspective, and that's the only the only way that I know how to cover the markets. I see more bullish continuation on for metals. That doesn't mean, and I need to go, I need to show you again this bullish chart on a daily for gold.
Yeah. So show me, I mean, some medium-term projections that you have.
Let me try to push these charts. This is a weekly, actually, this is a weekly time frame for gold. Let me open this on a new tab for a full screen and a clear picture. So we are, actually the market is, has found some resistance above. Let me check can you tell me the exact price at this top, Steve? So we have the
At the high, you mean?
1452, so
Yeah.
1452. So I was expecting a few points higher. So I was expecting that pressure level a few points above. At this point, I will not be surprised with a retest of this
If you
monthly
see a pullback, eh?
a pullback. Yeah, but the most recent, and for that, obviously, this is a weekly time frame. Everything can happen in the 2 weeks duration. So on a lower time frame, everything can happen there. So I will not ignore the possibility to retest these highs.
Yeah,
So
might
the
be the
previous
case.
structure resistance,
And that is probably going to be enough to scare off
of course,
some latecomers, some weak
yeah,
longs
yeah.
in getting
And
out of the market before metals can continue higher, actually.
exactly. I will not ignore. Let me try to see if I have my monthly resistance there. So 1346, that requires a huge fall from those levels. At this point, I bought some gold yesterday. I bought this, I entered this 5-0 pattern. The market has decided to threat my levels and actually to break below this golden fib, scaring me a little bit, threatening my stop loss and bouncing from right above, so right below. At this point, I need a clear, I need the price to recover this daily fractal resistance. So it's this resistance here. So this is a 2 hours time frame chart. This was the daily fractal printed last 11 July. So, and we are now threatening that level. As I assume if the market recovers above these levels, eventually it will retest and it will give sequence to the pattern. So we have very similar to the one that I shared and we traded inside ForexAnalytix. We have this bearish shark pattern at 1618 extension. It has found support percent.
How come you chose gold as an instrument, given the fact that silver has been spectacularly overperforming during the past few days?
Because I choose at this time I choose gold because these rallies on silver, well, it doesn't offers me. First of all, I have no pattern to trade. First of all, I have no motive to engage the market with a friendly risk reward approach on silver. It's not the same. It's not the same price action. We can try to identify that same price behavior, but we don't have the same pattern. I don't have the same motive. I can try based at the same time frame. We have a clear sign here, bullish hidden divergence between those lows, with the market rejecting those, rejecting to follow and finding support at one specific Fibonacci level, but that is not enough for me to engage, to try an engagement. So we see the 78% retracement acting as a support with signs of bullish divergence that can provide me a signal to try, okay, eventually the market will form an ascending structure here. The first high, it will print a second and a third one, eventually a third drive. We don't know what the market will print me, but this bullish hidden divergence suggests me more bullish trend continuation. At this point, based on the time frame that I was searching for an opportunity to get involved, I don't have a pattern on silver. I have a clear pattern on gold, based on both and the expected performance for metals. I pushed that trade for gold, expecting a similar reaction as silver and other metals, with some exceptions. I hope that answered your question, Steve. So I need a clear pattern to trade. I need a motive that allows me to put my capital at risk with a friendly risk reward approach, with a pattern that I know that works well. Can you hear me, Steve?
Got it.
Okay.
Very
So,
well, mate.
okay.
Loud and clear.
Because I changed my headphones to Bluetooth, and I'm afraid sometimes I can lose you. And because we mentioned it before, let's talk about oil for 12 hours time frame. And some of you will remember, and I was talking with Dale about this chart last week, with the possibility to form this bearish pattern there with the eventual cup and handle formation. The market ends up breaking above this resistance level, printing a fractal above, and then a pullback again. So at this point, we have no bullish iron divergence, very similar to what I showed you before. So we're suggesting more bearish continuation. So at least not suggesting
the 4-hour chart tells
clear
me
boss.
the same thing.
Yeah. And based on, and again, based on, always the same for me, based on the Fibonacci criteria and the Fibonacci ratios presented here, I will not be surprised to see oil trading the 160, searching for the 161 extension, not this one, searching for the 161 extension at this point, position at 52.86. So this is the first level for the shark pattern, which may also extend to the 224 extension. Below the fractal, the weekly fractal support. So this.
Coach, is your
Yes.
guest here?
Yes.
Okay.
And
So
just to finish with euro versus dollar, because I mentioned it before, that we are now facing a 78% retracement, which I doubt the market will respect. I have no clear, I have no signs here for that to happen. So, but we are now facing the 78% retracement based on the Fibonacci ratios there. This is the completion point for a cipher pattern, but as we can see, the market is violating this ascending structure. So it's a very risky trade setup at this point to engage this cipher pattern. There's another crab pattern a few points below, approaching the monthly and the weekly fractal that will offer at least a friendly risk reward approach for those who are trying to find a motive to go long with euro. This can be eventually 111.36. So this is the ultimate and extreme level to search for buys above these monthly and weekly fractals. Below that fractal support level, I admit the market will keep trading even lower, even if they need to consolidate a little bit below, it will keep trading lower. Default projections for the left, for the hedge and shoulders formation, 0998. So this is the default projection for the pattern.
we have some growth upgrades coming through from the IMF. Italy growth forecasted at 0.8 from 0.1, so quite an improvement there in the forecast at least. IMF also raises the 2019 US growth forecast to 2.6 versus 2.3, that was the previous forecast. But at the same time, the IMF lowers the 2019 global growth estimate to 3.2 from 3.3, which was the previous one. And, you know, IMF also speaks about downside risks on trade tensions, etc., etc., etc. Just wanted to pass that information through.
Cool. We have a meeting, interview, Dale.
Yes.
Yeah, they promote your guest, and Andre can be with us any day of the week he wants to.
Yeah, sure.
Okay.
I'm sorry because sometimes I extend my speech
Don't worry.
around
okay.
the same chart. But
That's a-
well, it's
Nobody's worse than I.
All right. Thank you, Andre. Thank you, Steve. Michelle, I'm promoting you. Have you had a promotion lately? It's going to be great to talk to you, but it's been a long time. So I just made you a panelist. Let me make sure you're unmuted. You are now.
I'm able to speak, right?
Yes, you're unmuted. Michelle, great to hear your voice.
All right, let me just see if I can get you my computer.
Your screen, it's a little green box at the bottom, says share.
Yes, it says this will stop other screens. Do you want to continue?
Right.
Yes.
Yes.
And I want to show this one. Share. Can you see it?
Perfect.
Coming
Yeah,
up
perfect.
right there.
Oh, okay. Well, okay, good. Now that we're all set audibly, visually, I can say good morning to you guys. Dale,
Okay.
how are you? I haven't talked to you in a long time.
I promise, Michelle, this type of span between us talking to each other will not happen again. How about that? So, I mean, it's been years since I was moderating on FX Street, right?
That's right. That's right. And that is the
Okay.
last time we spoke. So everything's
Okay.
great. Health good.
Yeah.
Head
Yeah,
good.
you know, okay, let me knock on wood.
Yes,
Yeah, they're
definitely.
okay. Yeah. You know, after what I went through, every day is a bonus day, Michelle. So,
Absolutely.
yeah.
Absolutely. When you learn to live in gratitude, it really is, it opens up a lot of different doors.
And drawdowns are a walk in the park.
Yeah.
Okay, so anyway, it puts money in perspective. But, you know, Michelle, I always loved your technical work, and I just want to tell our viewers that are here live now and watch the video later that you got your start on, was it the COMEX? Was that the exchange?
Actually, I started on the coffee, sugar, cocoa
Oh,
exchange.
okay.
Yes,
Exotic.
yes, I know.
Yeah.
I worked for Conti Commodities, which was the Continental Grain Futures
Right.
division.
Right.
And I was really lucky to get that job because I did not come out of school with any kind of business background. I became a special education teacher and I didn't have any money. My dad was a mailman. I mean, so we never sat around that table at night talking about our assets and our equities and our investments. No, it was never that kind of conversation. So, so I went into special ed, and then after a couple of years of doing it, and I was really young, I met this woman who lived in my building in Manhattan, and she worked for Merrill Lynch on the floor. And she brought me down to the floor in the World Trade Center.
Yeah.
And it was like, wow, my world opened up. So I went crazy to get down there. And eventually this guy, Paul Sarnoff, who's no longer with us. Yeah,
yes.
Silver Bulls, that guy, he hired me. And I went to work as an analyst on the floor, which was kind of funny since I knew nothing. But he figured I would jump in and learn, and I did. And then within a year, I was a broker. And then I moved to COMEX, then I moved to NYMEX, then I moved to
well,
Finex.
you're skipping something though. With
What?
all this exchange jumping, you fell in love on the floor with somebody.
Well, that actually was more towards the end of my career. It wasn't. I mean, it wasn't. Let me tell you something, Dale.
All right.
I never was down there thinking, oh, there's so many men, I want to find a husband. No, that was not my thing.
I never see how defensive women are. All I'm saying is you found love. I didn't say you were a gold digger and out there hunting.
No, I didn't imply that. I just wanted to mention that actually Keith Schneider, who's my husband, who you're referring to, left the floor when we finally hooked up. We met again, sort of like that neighbor.
Well, he was the one that was looking then, and mission accomplished.
Exactly.
And he left the floor.
Exactly. It was all, he was coming back to get some stuff to move, because he was already moving out of the floor, and I happened to walk into the elevator, and it was kind of like that was it. It was
wow.
So
love American style. So Michelle, you know, I do recall, you know, I haven't been really following your work that much lately, but I recall that, you know, you learned a lot of things on the floor. A lot of people could not make that transition from being a floor trader to trading off the floor because a lot of them are just order fillers and they traded against a paper and they didn't have to be right directionally. And you weren't one of those people. You were forecasting markets when you're on the floor. So you made the transition to being a trader, whether you were in a pit or sitting in the comfort of your converted office, so you only had to commute from one room to another. Tell us about what type of methodologies you were impressed by when you were there, and what you still may be using or what you've tossed aside.
Great. Okay. So, yeah, when I was down on the floor, at that time, by the way, commodities were pretty hot. I got down there in the early 80s. And so there was no charts really. People were just in the pit following order flow and day trading, scalping actually for a few cents here or there. And that's how I got started, except for the fact that there was a big difference between how well my voice carried versus the men, and also my physical size. So I spent a lot of time in the pit, and sometimes I felt like I was standing in a washing machine. But I knew I wasn't not going to be able to compete physically. So I had to come up with something else. And I saw a couple of people keeping point and figure charts outside of the ring. So I went up to them and decided this is what I want to do, is I want to learn everything about charting. And so I started stepping outside, keeping my charts, I'd go in and out of the pit with my charts. And eventually, in those days when you didn't have all the stuff that we have now in terms of technical analysis with computers.
All we had were books, chart books. And,
and we had
VidCom. VidCom was the first, and there'd be a line waiting to get to the VidCom at Madoff & Sons, I remember.
Exactly. I didn't have any kind of computer at that point. So what I had was Commodity Perspective, which was a weekly magazine that would come every Friday. And then for the following week, I would literally draw in all the different commodities, the high, low, close, and then I'd do the point and figures. So eventually, putting it all together, I would unravel pages and pages of graph paper on my living room floor, and I would start to see patterns, and then I'd be able to compare those very short-term patterns to the longer-term patterns on the weekly chart. And I got so good at it that really, basically, I was spending a lot of time advising some of the top traders in the world at that time.
I also knew what I had eaten in the last few weeks by the stains on my Commodity Perspective chart book. So, okay, so pattern recognition was something that I learned out of Edwards and McGee analysis of stock trends. I was saying earlier in the program that it was my Bible, and the debate about head and shoulders being reversal formations. Now you could trade them, within a trend. I've had to adapt to, being flexible about what I learned earlier. Tell us about what you're doing now and seeing now, and you sent me a DM that there's a lot to talk about. So I'd like to dig into the markets and look at the charts after, you've been a professional for quite some time. So if you were good at recognizing patterns then, I have to assume that it's kind of second nature to you now.
Well, yes, and of course, Keith Schneider, by the way, and Jeff Bish, who worked with us, were also on the floor. And so they started Market Gauge over 20 years ago. And the basis of Market Gauge, by the way, in the beginning, was they were selling tools mostly to institutional investors. Oh, I'm sorry. I'm sorry. James, our vice president of Market Gauge, just walked in, so my dog let me know that. Apologize for the barking. But anyway.
Glad you have a bodyguard.
Yeah, and what became our signature tool back then was using the opening. Raul! I'm so sorry.
Don't worry about it. You could just
James,
keep
can you get him out of here, please? Thank you. Okay, he closed the door.
Raul, I'll give him a tagline after this.
Yeah, Raul is a little 11-pound Havanese who thinks he's about 150-pound Great Dane. But anyway,
you know how the psychiatrist diagnosed me. I won't do that joke again.
Okay. All right. So
you
anyway,
remember it, right? Go
so
ahead.
I wanted to mention that because it's not like being upstairs for the last 20 years,
Yeah.
I've been without a company behind me. So we've been able to use all the stuff we learned on the floor and apply it to not only our tools and our analysis, but we even have quant models now. We have 5 different quant models
Okay.
that we use based on trend strength indicator metrics. And then there's me, who is the discretionary trader of the company. And so the big thing that I use now, something I layered in over the last 20 years, that I just had a book released in May called Plant Your Money Tree, A Guide to Growing Your Wealth, is the whole notion of these 6 market phases. So that's kind of what I want to show you here,
Okay.
and how simple that is. It really takes so much of the MACDs and the Fibonacci's and the Elliott waves and everything. It takes that out of the equation. Not that I am against that or don't believe there's validity to it, but sometimes going back to what I cut my teeth on, a simple chart and understanding these longer term moving averages and what that means for the phase the instrument is in, how to determine risk and where to start taking your profits, has been really the basis of what I teach, because it really gives you a fundamental start. So with that, you can see my chart. I wanted to start with this only because as a commodities trader, where now obviously I trade tons and tons of equities, but as a commodities trader, I really always have a penchant for trading anything that's a raw material. And the metals are something obviously I've been following for a while. I've been tweeting about it at Market Minute if you don't follow me already. And what you see on this chart before you is 2 different charts. The one on top that I'm using my cursor here for is just the plain old silver chart. Now it has way more lines than what I just told you, because this is a program chart. This isn't one of the charts that I use. We'll get to that in a moment. But this one below is the chart that's interesting. This is the silver to gold ratio.
Oh, yes.
Okay, and last week,
boom,
it was at a 90-year low, silver to gold. And so I knew that wasn't sustainable. And so I started watching it, and I got my people. When I say my people, this is my Advantage service. As soon as we broke, this is the 20-day moving average, the red line. As soon as we broke that, silver was trading at about 1450. We got in. Now this black line.
Did you execute a gold silver ratio trade or just use that to be long silver?
We just use that to be long silver, mostly because I am sensitive to the fact that many of my subscribers may not be really as sophisticated as buying a ratio and then being able to unwind it. So for simplicity's sake, we bought the silver. We're already long gold, at least in our discretionary account, and we're long gold miners in the Advantage service, and we've been long gold miners GDX since 22. Okay, so I was already watching this, but I was waiting patiently for silver to catch up. So now look where we're at right here. This black line is the 125-day moving average, and we got.
Why did you select these numbers for moving averages?
This comes from James, who you just heard my dog bark at, and Keith. They are the programming mavens, the coding, and this is based on a lot of back testing, analysis, etc. So sometimes, sometimes I question and analyze, and sometimes I just go, wow, that makes a lot of sense. And so here, this was one of those things, but they chose it based on those metrics, and you can see it worked perfectly. The dotted lines are Bollinger Bands, so we don't have to worry about those right now. But here, look what's happening. So now we have silver right up to the 125-day moving average, which means with silver trading at 15, it's going to open up, let's see, where is it looking at right now? 1544, starting at 1450 when it broke out. That's still not very big move. So I'm saying this is because I wanted to see digestion, maybe the last 2 days with a digestion, but if silver continues its tear, then it starts to look really, really good, and could go much higher is really what I want to say. So I wanted to show.
And closes over that black line would tell you there's more acceleration.
There's more acceleration.
But there is a possibility of this black line, because it's been such an impulsive, huge move, that we could digest the gains in the gold silver ratio and correct a little bit.
Yes, and I think if you use the $15 level in the SLV as a sort of a risk point. I mean, you can go a little bit more than that. At least you don't feel like you're taking this huge risk. And then this way, if you see more, let me show you the silver chart looking at this, and then we'll go back to the S&P. You know, look at, this is the 10-day moving average. When I say simplicity, I'm not kidding. This is basically what I look at on I have a 1-minute chart too, which I'm not going to put up because it's not as interesting as this one. But this is your 30-minute chart. This is your monthly chart. This is your weekly chart, and this is your daily chart. So it's kind of like being on the floor. And then with my 1-minute chart, I can see the short-term patterns, but I'm always looking at it within the phase and where we're at in terms of, you know, just overall chart pattern. So this to me is, look at this. This is silver right here.
Right.
Let's make that a little bigger.
What phase are we in?
Well, right now,
Bottoming?
well, the bottoming would be the formation here. Look how
Okay.
you have higher lows going back since about a year ago.
Okay.
But what's interesting to me is the green line is the 200-week. The
Nice.
blue line is the 50-week. So this can apply whether it's a 50-day and a 200-day or a 50-week and a 200-week. When we cleared the 50-week, we went into what I call in the book a recuperation phase. Some people might call it a recovery phase.
Okay.
It happens to be my favorite time to get into any instrument, because generally you know right away if you're wrong. If it breaks back down underneath that weekly moving average, you're wrong. And if you're right, you're getting in long before the public is getting in, long before it becomes a topic.
Do you
And
use physical stops or mental stops?
I use physical stops, but I will adjust those stops on the basis of the opening range. So let's say something is really close to getting stopped out. I probably will remove the stop, wait 30 minutes, and then put the stop back in.
Okay, because I've used mental stops before, and my first stop was a mental institution.
Yay! There's a Dale
man,
joke
I'm
for
just
you.
checking. I got a million of them, Michelle. You know that. Okay, so go ahead.
So here's, look where the weekly moving average 200
right
comes
there.
in at 1541. So the last time that was over was 1 week in April of 2018, another week earlier in 2018. So you can see it's popped through it. But here's the other thing for people to understand that I talk about in the book, and this is what I teach my subscribers as well, is the slope. Okay, it's physics, right? So you want to see momentum with the slope neutralizing and starting to turn up, which is exactly why when it broke above the 50-week here, I wasn't necessarily interested, but look what happened here. So I actually got in a little bit earlier than what I put my subscribers in at. I waited for the ratio for them. And now you can see not only is this slope up, but what's happening to the 200-week. And that's a long time, by the way. That's 4 years. This is starting to neutralize. So I would take this along with what I just showed you in the ratio as a very good signal.
Okay.
And don't overthink. You know, I just read this whole article about how kids, younger generation, I shouldn't say kids, are so into the fundamental analysis, and they think and they think and they want to reason and they want to know, oh, the dollar's too strong or the rates are too high. I should forget all of that. I didn't know.
Analysis paralysis.
Exactly. Oh, perfect. That's exactly the way to do it.
And how about, you know, everyone waiting for everything to line up for the perfect trade that doesn't exist and letting multiple opportunities pass them by?
Well, and you know, you can really take that one step further, and it's that fear of losing. And believe me, if you have a fear of losing, then you're in the wrong business, because you're going to lose, and you're going to lose a lot. The whole idea of trading is losing a little bit because you have a system, and when you actually are making money, let your profits run. And I'm already getting from my subscribers who are long at 14.55, when are we getting out? Now I've given them a target, and the target, by the way, is much higher than where we're at right now. But that doesn't mean that I don't start trailing up my stops, because you don't want to ever turn a winner into a loser. But nonetheless, you gotta play if you're really interested. Now let's go to the other thing.
So you tell them to possibly, if they have the itch, what I've discovered for me is taking partial profits on a position is a win-win, because if the market then corrects whatever move you're in, you could recommit with profits rather than principal. And if it keeps going, at least you're still there with something.
Yes, and basically that's what we do. We do take partial profits, but you don't want to take them too soon because now again you're risking more than what you're actually locking in. So instead of doing that sometimes, and we try to have very reasonable profit targets, we'll just move the stop up. So right now with this 10-day moving average sharply rising, and look at the 50s about to take over the 200-day moving average, which will put it in a golden cross, then I would probably say let's go to a no loss stop. And it's the same thing. Basically what you're saying is now I know I can't lose money on the trade, and
that's
I can
nice.
and I can afford to let it run, because if this is really bottomed, we got a long way we can go in silver. So all right, so now let's move on to the other thing that I wanted to talk about. So my other sort of signature over the last 10 years has been, I created what is called the economic modern family. And so essentially that's one index and 5 sectors that I think really are the ones to follow for you to be able to get a great macro sense, and 2, to see rotation. Okay, so now this is all 6 sectors, and this is looking at a weekly chart. And this is really important because I think this is why people are scratching their heads here going, what the heck is going on with the market? You have tech, which is here semiconductors. This is a 50-week moving average and a 200-week moving average. This in June started clearing the 50-week, while everything else in June was really basically failing the 50-week. So you knew one of the 2 things had to happen, that semiconductors was going to actually motivate the rest of the family, and I'll talk about who they are in a moment, to start moving up, or semiconductors would look around and go, wait a minute, what the heck's going on here? I'm way overpriced to everybody else, and start selling off. What's happening is really neither scenario has happened. We haven't really seen great strength in any of the other sectors, and we haven't seen any really, really great weakness. So this is IWM. So this is the Russell 2000. Why is the Russell 2000 I consider to be the granddad of the modern family? Because this is the manufacturing stocks within the United States. These are 2,000 small cap stocks, all of whom are manufactured in the United States. So if you really want to get a pulse of the supply side and the manufacturing in the United States, you look at IWM. This guy here has really been having a tough time getting back over that 50-week moving average. It was up for a couple of weeks there. Last week closed below it. So far this week is sitting right on it with its opening today projected at 154.40.
Well, give Grandpa a little Geritol so we could trade 160.
Absolutely, and sometimes Gramps takes Geritol, and when he gets going, that's really, to me, when the market gets exciting and at least trending. Then if we move over here, this is KRE, this is regional banks, not Bank of America, not Wells Fargo, but your State Street Bank and Fifth Bank, et cetera, et cetera. And the reason why I put this one in the modern family is because if you really want to measure, again, I want to see what's going inside the market, what's going inside the country. And if you look at more of the rural communities within the states, particularly where I live in the Southwest and in the Midwest, this is going to tell you how robust the banking business is. Are people borrowing money
rather
to start?
than XLF with the multinationals?
Exactly. Are people borrowing money to start businesses, buy homes, etc.? If you look at this, look at how the 50-week and the 200-week are starting to get closer and closer, and the price is sort of squeezed in between. Interesting, because if this gets going, you have a great opportunity, and if it breaks down, the reverse. Here's IYT. So if IWM is the supply side, IYT, which is transportation, going back to the down theory.
And what member of the family is KRE?
KRE is what I call the prodigal son.
Oh, okay.
And the reason why I call him the prodigal son, and he's a big old Texan. By the way, I've created characters for this. I've really taken this far. I have dolls. I've done performance pieces in these because it's the best way to teach. So if you think about what a prodigal son, what in the Bible, the prodigal son is the one who took all the money from the parents, disappeared, spent it lavishly, and then came back asking for forgiveness, right? Doesn't it sound just like bankers? Think 2008.
Yeah. Well, and the father not only welcomed him back, but ran towards him with his arms open.
And that's exactly what happened in 2008. you know, too big to fail. So that's where KRE got his name.
Okay.
IYT is transportation. So as I was saying, extremely important because obviously supply, demand. So this is where
Right.
your rails, your trucking, your airplane, shipping, that's where these stocks live. And you can see that he's been a reluctant participant following his wonderful sister here. But by the way, Semis is a woman. And I'll tell you about that in a moment. Going past the 50-week, but trying for dear life to hang on to it. So you really have to keep a close eye here.
Is that the Playboy? Because he's jet setting all over the place.
Well,
and then he doesn't,
actually,
or what?
Tran is a transgender because I have a great
You're kidding
imagination.
me.
Well,
Huh?
but it's based on a true story.
Okay.
In the 1960s, oh, there we are. Market just
All
opened.
all
In the how much time do I have, by the way? Just
As
so.
much as you need, Michelle.
Oh,
I want to
okay.
meet I want to meet generations of your characters. Go
Well, I'm
ahead.
really glad the market opened because look
Yeah.
what's happening here. So this didn't quite get to 154.40,
Yeah.
which is the pivotal point of that 50-week.
Yeah.
This is actually opened up down a little in the KRE, and IYT's opened up, but it's really inside last week. So anyway, transgender, let me get back to the story. So in the 1960s, there was a male airline pilot that went through the operation and became a woman working for Eastern Airlines, and they fired her, and she filed a suit, and she won. So to me, I thought, well, that not only was, you know, tran as a prefix means moving and changing.
Now I get it. Yeah.
Right? Moving and
Yeah.
changing. But
Right.
a transgender is somebody who's changed. And this whole sector is one that's based on moving and changing, hence my transgender. But
you creative thing, you. Go ahead.
but anyway, more importantly, what does that have to do with all of us? Right now, what we want to see here is this continue to hold. And let's see what happens as it gets through the big range that we had last week.
Okay.
Now, Sista Semiconductors, you could see, look at that.
Yeah.
Now, this was the high right here done in April at 120.71. So that's going to be the number we're going to be looking at to see if it can clear or not. And again, even though semiconductors, which by the way is, you know, comes from Silicon Valley, a big part of the US economy, but also highly speculated because obviously we are in this country the innovators of tech. And so that's why this has made the Modern Family. Plus, she's our superstar. She's our Wonder Woman. Semiconductors have been on a tear really since 2012 when it bottomed out.
Yeah.
So moving on here, this is biotechnology, IBB. Amgen, Biogen, those companies in particular.
Weak.
Yeah, very weak. Been a political football is part of the reason with the whole opioid crisis. But secondly, also the most highly of all these different areas, IBB is the most highly speculative sector. So what this does and why it's in the family is really tells me what sentiment is based on what I'm seeing people doing in this. And you can see that right now, and this is no surprise, the market is very under-participated right here. So essentially, if we get to see any of this all join in sync, and I say a family that trades together, stays together, a family that's in diversion, it's a good time to be more cautious. That's why we're exercising caution. Now, if grandpa, oh, by the way, big brother is what I call biotech because basically, you know, obviously big brother takes care of us with all the medicines that come out, whether it's, you know, forget about the opioid crisis. Obviously, that is a crisis manufactured by the pharma companies themselves. But the reality is, what will we do without our medicines, right? I mean, thank God for Western medicine. And then XRT is the wife of IWM. This is Granny brick and mortar retail. And I include this. There's a teeny weeny component of online shopping in there, but this is basically the malls. This is, you know, your Walmart and your Home Depot and your Macy's and your JCPenney and your Target, DJ Maxx, etc. What you would see when
Poor Granny, they want to put her in a home.
Yeah, she's really having a rough time.
Why doesn't the family take care of her instead of being selfish and not wanting to put the time in?
Well, you know how we are in this country. We're not necessarily so good to our elderly here, if you want to use the metaphor further. But essentially,
that's a tragedy.
Right. What we look at the chart, we know, I mean, nobody who doesn't go out and about can see that the malls have really been hit, and so many
Yeah.
stores have been closed.
Yeah.
And so this is still the 70% measure of the gross domestic product is brick and mortar
Great
retail.
point. Great.
So this is extremely important. So if you put them all together, you've got your manufacturing, you've got your banking, you've got your transportation, the chips, the speculative interest in the biotech, and then you have the brick and mortar retail. And 3 of these, by the way, are exactly what Stanley Druckenmiller in his most recent interview would call the inside of the market. So
Okay.
I know when I did this long before I heard that interview, but I was thrilled to find out that he considers the small the small caps, the retail, and the transportation as the inside, and I'm doing air quotes that you can't see,
Okay.
of the market. So essentially what I would say to you people listening is, yeah, great. If you're in semiconductors, excellent, but I would start thinking about taking some profit here as we watch today, because if we cannot see these things really take off by the end of the day, particularly the IWM, get clear that, and as the week continues, and this is just sort of a rally that peters out by the end of the day, I'm not really feeling all that warm and friendly about equities. I'm much more interested in right now commodities.
Okay. Do you have enough conviction with the dysfunction in the family right now to attempt shorting the market?
No, I wouldn't short necessarily just yet. It's been actually a fool's game, because you think, oh my God, the market looks terrible. And then, you see this, some news sensitive, today we've got, okay, all of a sudden China's back at the table. We'll see about that. Obviously, we've got the Fed. People are anticipating next week there's going to be at least a 0.25% drop in rates. We've got that. And then, even though it sounds so silly, oh yeah, great news, we reached an agreement that we're going to increase the debt, increase the spending, but nonetheless the government's going to shut down, so it's perceived as good news. And this is a market where you don't sell a dull market. That's never a good idea.
Yeah.
And with all of the fact that it's been sitting here so dull, it hasn't gone down very much. It's teetering. So I think if you're just a little bit more patient, you're going to have 1 or 2 opportunities. You're going to see this family start to move up, in which case we could see the Dow Jones go to 30,000, or it's going to peter out completely, and you're going to see the semiconductors start dropping. You're going to see some of these bigger moving averages start failing, especially looking here at the 50-week and then here at the IYT at the 50-week, in which case then you'll have your short opportunity. That's
Okay,
how I'm looking.
so you have an upside target in the Dow. If they start rolling over, you have a downside target?
If they start rolling over, well, let's take a look at the Dow here on a longer term chart. Okay, so here's your monthly chart here, and that's, I like to look at the monthly chart. This blue line here is a Bollinger Band, and right now we're sitting right at the Bollinger Band. If this actually fails to go through and we don't get that target to the upside, I'd say we'd go to 25,000 quick. These are psychological numbers. Last year I was writing dailies that were called Terror in the Dow at 25,000, based on the old Twilight Zone where William Shatner's on the plane and he sees the gremlin on the wing. I don't know if you remember that, but anyway, I think in images, as you can tell here.
I do, yeah, I'm like that too. Michelle, you have any images on the bond market? There was a huge move, your TLT is good, a huge move into bond funds I saw on CNBC, and people coming out of stock funds to buy bonds. Maybe they're wrong-footed here, or are they making the right move?
Well, I think when they, we got in, again, one of our quant models, our alpha rotation model, got into bonds really quickly, and we caught the bulk of the move, and we've already taken some profits. Those getting in right now, I don't like when I see, talk about old-fashioned chart pattern.
Like
this is kind of an exhaustion. It's not an island because it didn't gap.
It did. So only by a few points on my platform.
Yeah, well, you can see
gapped
here.
Up, gapped down.
Right, but you see here this high. For it to be an island, it literally has to have water all around it, and it doesn't. But nonetheless, if you look at the ultra short, the mirror version of this, the TBTs,
looks good.
You see here, this actually was an exhaustion gap. This was a true gap, and that's when I started thinking. But this, I would always watch the TLTs here, and honestly, right now, if the Fed only does a 0.25%, I think that the bond market will be a little bit in trouble. I don't think people will think of that as dovish enough. However, look at the long-term charts. We still look pretty good. So I would say 130 is going to be my first area that I'd want to look at. This dotted line here is an exponential moving average, but what more important to me on that exponential moving average is that it lines up with this high that we had right here in 2017. So I would say your next area would be 128.74.
Okay, we get through that. We're going to your green line. That's my target.
I think so, yeah. Which would not be great for the market, by the way.
Right.
So
I mean, everyone thinks they have to move in opposite directions, but why? They both gone up together. Why can't bonds have a bull market correction and the S&P is correct because a yield of, say, I don't know, 10-year back to 250, 270 would compress margins?
yeah. So now the last thing I want to show you is because
S&Ps are under pressure right here.
Right. I want to show you two more things, and then and then I think I've given you a lot of information. But because the other ratio that is ridiculously out of control is the stocks to commodities. 100-year low. 100-year low. That's pretty amazing, and it's been sitting there. So if we take a look here at DB,
I remember that low.
You remember that low, right? So if we take a look at two of the ETFs that I think are good to watch, this is DBA. So DBA is the agricultural fund, right? This is what I'm talking about. Has been at a 100-year low against equities. And so maybe it's come in a little teeny bit, but by the way, talk about a clean bottom down here. But you can see, again, we're looking at the 50 and the 200, and it's underneath the 50. It's floundering on the monthly, floundering on the weekly. So again, just like I showed you with silver, what you want to see, those of you who are interested in getting in, possibly buying this if it moves up, if it clears 17 on a weekly basis, which is also going to be above the 50-week, and that starts to neutralize and slope, I think this will be the best opportunity to watch for. The other one would be DBC, which is more oil and metals. Now, even though the metals are good, the oil is under pressure right now, but this would be a similar type of situation.
More industrial.
Correct. If this gets through
copper in there too.
Right. If this gets through like 1610, again, look how declining this slope is on the 50-week. But if it starts to neutralize and this clears it, this is really where I'm looking at for the best opportunity. Because for, again, if we're looking at SPY, it's not getting through 300 here. How much more do we have? As I said, maybe we have another 2,000-3,000 points in the Dow, but maybe not. But what we do have is an opportunity to see some of those commodities turn around, just like we've seen with silver, which right now you can see is having an inside day to yesterday. No, actually, I'm sorry, I didn't look at it. It's actually above yesterday's inside day, still has to clear this bar. And if we take a look at gold, this is why the ratio is still blowing out here. Gold is actually down while silver's up, but I wouldn't necessarily get bearish in gold. I would just say that I would be looking at a buy opportunity in gold as well.
Okay, Michelle, this would be a great time to show your website and how people could subscribe and follow you and check you out. So if you'd like to do that now, feel free.
Yes, I would. Let me put that up here and bring that over. Okay, so this is our website. Whoops. There's me. There's my book. And if you click on this link, not only do you get the book, but you also get a $97 bonus for free, which is essentially my describing the phases, the 6 phases. Then every day I write a daily. So that's my daily from yesterday. Although right now I'm on a summer break, doing it 3 times a week instead of 5 times a week.
Good for you.
But this is all our free content here. So we have Big View, which gives you a lot of look at the markets and the scanners and what phases things are. Keith does a weekly outlook. And then if you want to look at my service, or any of our services for that matter, we have a lot of them. We have educational services, we have tool services, and then we have me. This is Mish's Market Minute Advantage. I have 2 levels of the service, which is essentially $4.97 for just getting emails, 2 videos a week, and then $9.97, which means on top of that, you also get mobile alerts, which means you get texts and emails in real time when I'm getting into a trade, getting out of it, and you get these scanners. And let's take a look at this scanner because this is very interesting right now. This tells you what has changed phases to a better phase. So Halliburton, which we know made a big move yesterday, went to a recovery phase. Cree, which is one that I gave my people today, actually went into a bullish phase. And look, it's now up 2.2%. So this is really a big Bible for me in terms of what I'm watching to get into new equities or, you know, the commodities. And then you also have one for a, excuse me, that's the mobile alerts, hold on, for bearish stocks. And that's, you know, the things that went into a bear phase, you want to see what's following through. So far, most of it, except for Exelon, which is a utility, are actually up on the day. So that's why we like to look at these things for a potential short setup, but we always wait a little bit for
maybe the utilities are confirming what I'm saying in the bond market here. They were in favor and they've been lagging lately. What do you think?
and the dollar too, which is ridiculously strong. So there you go. So that's
what a great presentation, Michelle.
Oh, thank you very much.
I love the way you think in metaphors and have come up with this. And I'd love to read your book. I think everyone should read Michelle's book because she's elite in her analysis, and it's not going to be complicated for you. I also think that everyone should consider what Michelle does as being part of their intelligence gathering for being successful in the market. So I want to thank you, Michelle. You know, you were still, even though we hadn't talked, my trading warrior sister, and I hope that pips rain down on you and Keith, and that you and your family, grandpa, everyone, that you're on the right side of every family member going forward the rest of the year.
Oh, thank you so much, Dale. And I hope you have robust health and wealth in trading. And I really appreciate you having me back on after all these years. And as my grandmother would say, don't be a stranger.
I won't, Mish, and we'll get back together in the fall, see what's going on. That's a promise.
Okay, thank you. You have a wonderful day.
Okay, everyone, that's Michelle Snyder. You could follow her on Twitter at Market Minute. What a great presentation. And it'll be on video within a few hours. So check that out. Everyone enjoy the rest of your turnaround Tuesday. S&P's under pressure. I'd like to see one more push up in the next day or so and attempt it. So adios, everyone. Good hunting. Remember, don't just count your pips, count your blessings. I'll see you tomorrow.